Greetings, traders. Of course, welcome to Institutional Trading, where we unlock the secrets of smart money trading. If you're new here, make sure to hit the subscribe button and ring the notification bell so you don't miss out on any of our future content. In today's video, I want to talk about mastering the inside day pattern, and I'll be able to dwell on the particular pattern known as the inside day pattern. And what you'll be able to learn, of course, in this particular video, you're going to learn what an inside day is, how to identify an inside day, the significance and usage of inside day, and of course, the chart example as we progress. What is an inside day? An inside day is where the entire price range of a defined day falls within the price range of the previous day. In other words, the current day that we are focusing on doesn't take out both the previous day high and previous day's low. So it sticks inside the previous day's range. So it doesn't take out the previous day high and it doesn't take out the previous day's low as well. Now, how to identify an inside day pattern? We are having these particular candlesticks, and these are bullish one indicated in white. Then the black is a bearish candle. Now, the inside day pattern is formed by two candlesticks, whereby the current trading day, this one, is stuck inside the previous day's range high and inside the previous day's range low. So it doesn't take out the previous day high and low. So the bullish candle is the previous day, but the day that we're considering is this particular bearish day, whereby it never took out the previous day high and the previous day low. It was inside that particular range, whereby this particular trading day's low makes a higher low and the high makes a lower high in reference to the previous day low and high. So it doesn't mean that we should be able to spot a bullish candle first and a bearish candle next. No, it can be a bearish candle together with a bullish candle like this one. So you can be able to see this is also an inside day, whereby the previous day, of course, it was a bearish day, but the current trading day is still stuck between the previous day's low and the previous day's high. That is what we're looking for. And this particular inside day technique is very, very significant in our trading. It usually gives me an indication that a large range expansion is bound to happen or to take place within the marketplace. And remember, small ranges lead to big ranges. So the presence of an inside day usually indicates there are significant, number one, large range expansion is bound to enter the marketplace. Number two, I'll be able to use the inside day for the filtration. I want the pairs that will be able to be moving. So instead of seeking any pair anyhow, I'll be able to seek an inside day. I'll be able to use the inside day approach to filter out, because oftentimes the market is the market and we can be able to anticipate some sort of prolonged period of consolidations. So it's a nice filter, and it tends to give you the indication that larger expansion is bound to happen within the marketplace, and you can be able to use it as a filtration process for the pairs and the asset classes that you should be able to be trading. Now, at some point, we can have the inside day, and maybe the next day, you anticipated large range expansion to happen, and it doesn't. It doesn't mean that the presence of an inside day the next trading day will automatically be a large range expansion. You'll be able to be having an allowance of either 1 or 2 days after the formation of the inside day. So you'll be able to be looking for certain signatures. They'll be able to give an indication that the market is bound to have a large range expansion, maybe in regards to the economic events, the high impact news events, and other filtration process or other tools that we utilize to define the relative strength analysis. So you should be able to have an allowance of either 1 or 2 days, but it tends to give you an early indication that the market is likely to be headed, or the market is likely to give us a large range expansion. Now, the bonus, it's at some point the market doesn't have to give us that particular inside day for us to have the element of a large range expansion. We can consider the body of the candlestick. Of course, everything we utilize on the daily time frame, because we are talking about the inside day. We utilize the daily time frame and we consider the body of the candlestick, ignoring the wicks. If we spot and realize that the body of the candlestick is small, that is also an indication of looming large range expansion, or large range expansion is bound to enter the marketplace. And what do I mean? So let us get a closer look of the chart. Now, let me begin first by just talking about the bonus point. Like I mentioned, it doesn't mean that only the inside day can be able to give us an indication of our anticipation on how we're anticipating the large range expansion to enter the marketplace. But of course, if we focus on the daily time frame, considering the body of the candlesticks, ignoring the wicks, it can as well give an indication that large range expansion is bound to happen. Now consider this particular day over here. The body was rather small as compared to the previous candle, in as much as it took out the previous day's high. What followed next was a large range expansion. Consider this one as well, ignoring the wick, focusing on the body. The body was small, but it took out this particular previous candle's low. But what followed next? Large range expansion. Now, let us dive into what I just talked about in regards to inside day. An inside day is whereby the market or the entire price range of a defined day falls within the range or the price range of the previous day without taking out the previous day's low and the previous day's high. Now, if you consider this particular candlestick over here, this particular doji-like candlestick, black one, you can be able to see that the low and the high never took out, the low never went below the previous day's low and the high never went above the previous day's high. So it was inside that particular range, the previous day range. It is an inside day. It tends to give us an indication that should be able to be anticipating some sort of large range expansion to step in. What happened the next day? We had a very big price run. Now, it doesn't mean that if we had this particular inside day at this particular point in time, it is a must for the market to immediately give us a large range expansion the next day. We can have an allowance of either 1 or 2 days at most. And you are having a lot of examples. So let us dive into the real charts and let us look at 1 or 2 examples. And I hope you'll be able to learn more. Now, this is gold chart. There is also another example of an inside day. You can be able to see this particular day on 4th of July 2024. The low never took out that July low, and the high never went beyond it as well. So it was stuck inside that particular trading range. Now, this one gives an indication that the market is likely to give us a large range expansion. But remember, you have to have a bias in mind, the order flow. Is the market respecting the discount array and violating the premium arrays so that we'll be able to be having a bullish stance, or vice versa? And of course, you understand that the market tends to be moving ideally because of two things. Number one, the drawn liquidity and the rebalancing aspect of price. If it is supposed to be moving to the upside, is there any clean level or any buy side liquidity pool that the market is targeting? Because the market will be able to be moving to areas where orders reside, because they understand what is residing above and the retail thinking. The retail traders will be able to see these areas as an area of resistance. But if you condition your mind differently, you'll be able to see this as an area of liquidity. And the market will be able to be moving to where orders reside. So there was this particular inside over here on the 4th. Now, if we focus on the next day, and I'll be able to dive into the intraday time frame, so they'll be able to see what happened and we'll be able to understand. Now, so this is the area whereby we spotted it the inside day, but I'll be able to adjust a little bit. And I utilize the midnight New York time for everything. So let me just choose red. Now, this is a new trading day. So let me just highlight them first, then I'll be able to resume in the presentation. Now, this was on Wednesday. This was on Thursday. So for me, intraday perspective, I tend to focus on the midnight. That is where the true day begins, midnight New York time. So I don't choose the days that comes with the charting platforms, or I don't choose the session breaks that comes with the charting platforms. So this was on Wednesday, this was on Thursday, this was on Friday. Now on Thursday, you spotted that the market never took out Wednesday's low, it never took out the high as well. It was stuck inside that particular range, and the market gave us some sort of a Z day in regards to the intraday profile. So this was an inside day technique, or inside day. And the indication after spotting the inside day, it tends to give you a clue that the market is likely to give us a large range expansion, either that particular next day or allowance of 2 to 3 days, just like I mentioned. So what happened on Friday? The market, in real sense, we had an aggressive price round after taking out the sell side liquidity pool over here, so that we'll be able to be having the buy program. Now, that is a wrap on today's deep dive into the inside day pattern. I hope you found this particular guide helpful, and that you're now ready to incorporate this strategy into your trading arsenal. And I want you to understand that mastering patterns like the inside day takes a lot of practice, but with the right approach, you'll be able to improve your trading decisions. If you enjoyed, of course, this particular video, don't forget to give it a thumbs up. Your support helps the channel grow. and reach more traders like you. Also hit the subscribe button and ring the notification bell so you never miss out on any new content. I'd also love to hear from you. What is your experience with the inside day pattern? Drop a comment below and let us get the conversation started. If there is a specific topic you want me to cover in a future video, let me know. Thank you for watching the video. And as always, happy trading. See you in the next video.